good way. You get a good job with the pay and you're okay. Money, it's a gas. Grab that cash.
Woo! Welcome back. True North, episode 40, the investment grade Bitcoin podcast. We are back. We are bullish. We got green candles cooking. Bitcoin is flying off the shelves. All engines are revved up, ready to go. We got 5 of us here. A few people are going to pop up, pop down, and we're going to have a great show. We got a lot to talk about, and we're going to get after it. Uptober, we made it. We're finally in October, Q4. Let's go. A lot of excitement here, and can't wait to get into it. So, topics for today: Uptober, off to a hot start. We're going to go into strategy statistics and a little bit about the preferreds because we saw some nice action there today. Get into some macro. We've got some of our macro research analysts, Dan and Dan Hillary, both Dan's on stage here today. Going to get into some macro, talk energy, precious metals, AI, and Bitcoin, and the convergence of all of those things. Talk a little bit about AI productivity, CAMT, corporate alternative minimum tax. I've got a new series that I'm starting here today called the Bad Bond of the Week. So we're going to look at just a bad bond and compare it to the strategy prefs. I think that'll be a good time. Bitcoin treasury companies, have we seen the bottom? And what is the end of Q4 look like? So obviously a lot to talk about here. Everything's moving. I feel like there's a lot of frenzy happening all over the place, and everybody is looking to buy as much Bitcoin as humanly possible. So yeah, let's get cooking. A lot to talk about. Let me pull this screen down here. So for those of you, if this is your first time watching True North, the investment grade Bitcoin podcast, what do? We are here every week, or as many weeks as possible, to talk about the front edge, the cutting edge of the Bitcoin security landscape. So everything happening in the securitized world of Bitcoin. We're talking Bitcoin equities, Bitcoin treasury companies, Bitcoin backed fixed income, how these things compare, thinking through valuations, thinking about market impacts, and how all this stuff fits together. So a lot of this is really novel. Many of the people on the screen work in the industry and have a unique perspective into what's going on behind the scenes. And I think that's where we add a lot of value to what's happening here. So yeah, let's get into this. First off, we got a word from Tim Kotzman.
Ladies and gentlemen, what you're about to hear may be amazing, but it is not financial advice. It's for informational and educational purposes only. Jeff, back to you.
There we go. So none of this is financial advice, and Tim was just in BTC DC. He may join us here a few minutes later and give us a rundown of what's happened in DC, just at the front line there. And then next, I've got a quick word from our unofficial sponsor.
Your ATM is safe. Your banks are safe. There's enough cash in the financial system, and there is an infinite amount of cash at the Federal Reserve. An infinite amount of cash at the Federal Reserve.
An infinite amount of cash at the Federal Reserve.
Don't you want somebody to love? Don't you need somebody to love? Wouldn't you love somebody to love? You better find somebody to love. Don't you?
Yeah, we totally sold out. We've got the Federal Reserve as our unofficial sponsor, and we're ready to rip here. Okay, without further ado, we are going to get into strategy statistics because I think this is good. We cover this every week. Leverage profile, what's happening in the market, and how this has changed over time. So as of today, the Bitcoin price is at 118,560, somewhere around there. Bitcoin held, strategy holds 640,031 Bitcoin on the balance sheet. They've got 75.8, almost $76 billion of assets, $8.2 billion of debt, $6.5 billion of preferred stock. So if you just take the assets minus the $8.2 billion of debt, you get $67 billion of net assets. This is a ton of capital, an absolute ton of capital. The net assets on the balance sheet by itself would be close to, top 150 companies in terms of market cap on the planet. So this is it's a ton of money. One of the largest treasuries in the equity market. You think about The exposure here too, the net capital after 4 years of the preferred dividend payments, you're still talking about $64 billion. So you've got tons of coverage on the liabilities that they've got on the balance sheet. You look at just general nominal leverage ratios, taking the sum of the debt and the preferred stock, around a 19.5% leverage ratio. Debt coverage multiple, this is just taking a pure, the debt, $8.2 billion of debt relative to the about $76 billion of assets. You've got a debt coverage multiple of 9.2. In order for the Bitcoin price to be less than the assets on the balance sheet, or in order for the Bitcoin price, or in order for the assets on MSTR's balance sheet to be worth less than the debt and the liabilities on the balance sheet, the price of Bitcoin needs to go down to $23,166 and stay there for an extended period of time before there even remotely becomes any issue. So about an 80% drawdown would be necessary from here. So thinking this is a very, very, very healthy balance sheet and continues to be a very healthy balance sheet. So yeah, it's all exciting. Also, where'd it go? We just finished Q3. So Q3 closed yesterday. On an earnings per share basis, we think the Q3 estimate earnings per share is around $10, maybe plus or minus $1 or $2, as a function of tax deferred liability and where that hits the balance sheet, and then obviously the operating business and any one-off expenses that happen here and there. But what do we know? The last day, Bitcoin has gone from 114,000 to 118,000. So already looking at Q4 strategy sitting on a $2.4 billion gain on Bitcoin held from Q3. And that would be so far 1 day through Q4 around a $6.4 earning per share estimate for Q4. Off to a great start. Uptober is hitting. We've got some guidance from the IRS on corporate alternative minimum tax. So that very one-off piece of FUD where if a company has more than $1 billion of net income a year, they have a corporate alternative minimum tax, which is around 15%. That would apply to any net income that a company experiences. So that has gone away, which was causing some concern and FUD within the industry because strategy was sitting on significant quote unquote net income from FASB fair value accounting, yet they were unrealized gains. So the concern was they would have to sell Bitcoin to pay off the corporate alternative minimum tax, which was a Biden era tax Inflation Reduction Act measure. So all really positive guidance. Everything seems like all of the roadblocks are removed. FUD is just getting out of the way. It seems like things are like rare and ready to go. So yeah, what do we think, guys? How are we feeling? We're bullish. Things feel good. What's cooking? Dan, I know both Dans feel some kind of way. You guys were on Monday when we were talking through everything. You're fired up on energy. You're fired up on precious metals. Things are ready to rip. What do we think?
Okay, yeah.
Well, first, I think we got to take the over/under on if we're gonna break 120 in this live stream here.
That's a great
Attempted
point.
it earlier, so I mean that's the real news.
That is the real news. 120 on the live stream, yes or no, and then 150 by end of year. Yeah,
End of October.
End of 150 end of October.
If you guys see the log pilot fractals, if you overlay the 23 and 24 fractals over the current pricing, it gets us right to about 160, 170, 180. APS K32s, power law 4-year cycle, a cycle cloud average is like October, November is the sweet spot. Equities markets absolutely ripping, no sign of slowing down. Copper breaking out. Gold already had its move. I mean, literally everything is absolutely perfect for a move in the next 60 days. Like everything, in my opinion.
Primed.
Call spreads
Primed.
for one.
Stock market's ripping.
The stock market's not slowing down.
There's a wall of worry right now in Bitcoin.
CMC, exactly.
You can
CMC
feel it.
fear greed's at 40. What is going on? This is the most bullish setup I've ever seen.
Government shut down. Government can't do anything.
Like the only more bullish setup was last fall and the fall before that.
It just seems like everything is getting set up. Dan, can you share any of those images, those fractals that you pulled up? Let's take a look.
Yeah, let me go. Let me go fetch them. Let me go fetch them, Jeff. I'll pull them up a second.
Yeah, and while he's fetching that, I do want to say, like, the dollar's in decline. We've got sitting president who's openly saying that he wants a weaker dollar. I mean, debt surging, Fed's, compromised in quotes. So I think it's just all leading to a Bitcoin super cycle. We've got, I think on the hurdle rate, you guys were chatting about that too.
Yes. There's a
I don't know if you've got that chart to pull up, but
there's a multi-decade decline in the DXY, and I'll pull it up here. And when you put it in log format, it
you guys were looking at 2008 and 1992, I believe, for the macro setup, and then how this one's exponentially greater.
Yeah, you could see it. You could see it pretty clearly here. Maybe if I pull,
this is like a structural, like multi-decade decline
in the dollar.
Got it.
Yeah. So this is something that Matt has been watching for like the last 15 years in his career as a fixed income guy. He's like been watching the dollar and it consistently hitting up against resistance and then coming down. And you've got this multi-decade structural decline. And we're, I think, getting to a point here, looking in the last couple of years, 18 or 21, where effectively the DXY, if it fails to see support here at the 2018 or 2020 bottoms, it could fall drastically. We're like to the 70s, 60s or 70s, thinking about just fundamental support levels. And that could be very, very similar to some of these large declines that have happened in history. So like 2001, large decline in the dollar, 1984, large decline in the dollar. And that would be a mega setup for a super cycle in the price of Bitcoin. And what does a super cycle mean? It's up and to the right with very little room or opportunity for like good entry points. And we talked about looking at the history of Apple. The price of Apple over time experienced a super cycle from, what was this? It was from 2003. Yeah, here it is. From 2003 to where we are today, Apple has effectively experienced a super cycle in and of itself. Maybe I can make this a little bit bigger.
And speak for yourself, Jeff. I would have entered call options in the 2008 bottom.
You would have went really long right here.
Yeah, and I would have entered long there.
Sitting in cash and entered bottom.
Do you guys remember that Saylor interview where he calls people who were trading Apple in 2011 from like $2 a share to $2.30 a share?
Yeah.
He
said it's a sign of lesser intelligence.
Yeah, sorry, pennies in front of a steamroller for sure.
Jeff, I'll throw my screen up here.
Yeah, go ahead.
Open my system settings. Yeah, these are the two fractals that window. Can you see that? Okay. Yeah, this is so if you believe in sort of a decreasing.
Yeah. Can you make it bigger?
If you believe in a decreasing CAGR for Bitcoin from like 50 down to 40 down to 30, and you extrapolate that average trend out forward, and then you look at kind of the deviation from that average trend above and below, you get this kind of overlay. And so what the cloud represents are the past cycles moved forward and then adjusted for the decreasing CAGR or decreasing volatility of Bitcoin over time. And the red line is how we've shaped up over the past kind of couple years relative to the averages. So the average is represented by this dark blue line here. And I was looking at this chart and structuring my options call spreads in the hedge fund right for this peak. And I'm like, I don't know if this is going to hold. We need to start moving on October 1st. And today is in fact October 1st, and we start moving. So this may just be folklore, but we'll see what happens. It would be quite remarkable if this continues to hold. And then I have one more that I think is of interest to people. This is more of like a general kind of TA thing, seasonality thing, but this is the fractal that Logpilot did this. He's kind of the man. So this is the current
kind of man.
This is the current price. We're sitting on October 1st. And these are the two fractals from 23 and 24 overlaid from the current move, which is quite interesting considering those price targets. So,
what does that put the price? What are we thinking on price targets for end of the year
yeah,
based on this?
sorry. Okay, so
narrow
here
scale?
is 150. This is 151. This is 196.
Yeah.
So these fractal patterns are saying we could get anywhere between 150 and 180 by end of year. I mean, the other cycle cloud said the same thing. That's at least my target. Like something above 150, something below 180, I think would be like a pretty good local top for the next, short term period of time.
And then it rips your face off and keeps on going. It keeps on chugging
maybe
away.
it goes to $1 million
And
tomorrow.
who knows?
But
That would be it. That would be a bad scenario, I think, for a lot of people.
11/8/2025 444,
exactly.
as the prophecy says.
Mason and I had a little convo
floating
with
out there.
Josh, and I think there's credence to what he's saying. I mean, Bitcoin, we forget how quick it moves, but it does move quite quickly. I think the interesting point is, like, you look at the move in 23 from 25K to 75K. That was quite a short period of time, right? That was, what was it? I think it was October to March was that triple, and the market cap wasn't materially that different from where it is today. So that's what I would say.
Yeah, it can move quickly. It's like 50 days, right? And most of the action happens in 10 days, 10 to 15 days. Like 80 or 90% of the action happens in a very short period of time, which is kind of throws credence on. It's really difficult to find good entry points on these things, like in and out at any given time, because it can move so quickly against you. I mean, just looking about, I know before the stream, Adrian and I were talking that it seemed like a lot of people were shaken out of just MSTR a couple days ago, and it bottomed out to 294 or 296 or something like that. And what after market today was at like 340. And it's like 2 days, right? 2 days, 2 trading days difference. And it's a completely different story. So it's difficult to find really, really good spots. So it's helpful to just take that long-term perspective. Think about, like, why am I holding these things? What's the purpose of holding an equity? How quickly do you need it? Be careful with leverage. Think through positioning and sizing, and that's what we're here to kind of think through all of this stuff.
Yeah, I think position sizing is an underrated portion of just general, like, retail and personal investment portfolio construction. Like, people don't talk about it enough. It's just like this asset, Bitcoin, this asset, this option, whatever. But like, position sizing is actually how the money's made. Like in poker, like the only thing you can do in poker is decide how much to bet and if to bet. And investing is much the same thing. So how much do you put in this position? How much do you allocate in MSTR versus Bitcoin? How much do you allocate in ASST? How much do you allocate in this, that, and the next thing? And I think that's like a really hard question, and everyone has to answer that themselves.
I agree. I actually rotated a lot of my Nvidia and Palantir profits into MSTR below 300. That was the move I was waiting for, and it's working out so far. I don't think that we're going to hit 444, though. I think that's a virtually zero chance of happening, but that's just my opinion. But I do think we can hit like 180.
Eventually.
Oh, eventually, absolutely. This year, no.
One of the funny things I think about with this is just like, we talk about price targets, what it might go to, and then it's like, okay, then what? And then what? Like, all the plumbing, the infrastructure of this game has completely changed. Like, you've got corporations that are buying Bitcoin forever. All of the lettuce hands are getting shaken out. They sold for billions of dollars, 80,000 Bitcoin getting sold for $9 billion or whatever. And okay, boom, that's gone. How many of those guys are left? Or gals, I guess, that could be holding Bitcoin, that Chinese lady that stole all the Bitcoin from those people. But how many of those people are left? And the game and the structure of the game has changed. And where does that capital flow? Like, what's the next 4 years look like? I mean, I'm not going to just delete, unless Bitcoin goes to 10 million tomorrow. I'm not just going to like delete my Twitter and walk away and get out of here. Like, I've got work to do, and it takes all of us to, push this monetary system forward. And, if it goes to 180, great. I'm not going to exit to dollars anytime soon.
If Bitcoin hits 10 million, though, I'm going to be belligerent as fuck. Like, I'm not going to be held responsible for what I do online.
It
When
will.
that day comes.
I mean, I think that's the cool thing about Bitcoin.
It's going
Is
to. Yeah,
it's
no matter when.
Bitcoin is a reminder that time is the only scarcity. Because if you had infinite time, you could theoretically have the smallest one Satoshi would make you rich on an infinite timeline. But
Right.
I mean, we don't have infinite time. But Bitcoin is time.
Yeah. Bitcoin is time. Bitcoin has created its own version of time. Like the each block has created its own version of time. But anyway, this concept is interesting. Thinking about valuation, and one thing that has happened in the last month, right? There was a lot of noise about S&P 500 strategy potentially getting in the S&P 500, them getting snubbed. Apploven and Robinhood got in, and strategy now has had their second positive quarter in a row. We know this because the books closed yesterday and the Bitcoin price is high. So we know that they're going to have 2 positive quarters in a row. And it was pretty fascinating. I did a quick analysis. I'm just going to share my screen on this too. I made a Twitter post on it. The comparison of Apploven to MSTR on just some general metrics. Actually, first of all, let's look at Apploven. Apploven in the last 25 days is up 49%. Robinhood in the last 25 days is up 46% since the announcement that they're in the S&P 500. So some significant movements there, which is pretty wild to see. And then I wanted to look at Apploven next to MSTR just for some comparison, because at one point in time, Adrian, we talked about this. This was like last June, July. Apploven and MSTR were like the same market cap. And they were going back and forth. It was like Apploven, MSTR, Apploven, MSTR. And now Apploven is at like a $250 billion market cap. And so I wanted to look at some of the metrics, given that the performance has been pretty high since they were included in the S&P 500. The PE ratio, Apploven PE ratio, 91 versus MSTR 6.5. So 13 times different. Obviously, Apploven holds 0 Bitcoin, so 100% different. The price to book ratio, or the technical MNAV, so like the market cap multiple relative to the assets the company holds, Apploven has a 194x price to book ratio, and MSTR has a 1.5x price to book ratio, so 132 times different. Debt to equity ratio, 300% versus 15%, so hyper leverage versus not very leveraged. And trailing 12 months net income, 2.4 billion versus 14.4 billion. So it seems like there's a massive disconnect here in the market, and just how things are valued and how things are seen. And it's been very clear. Like, you go into different avenues, you look at different places, look at LinkedIn, look at even what's happening on Instagram or TikTok, and the conversation about the technical value or what companies hold is just non-existent. It's not really there. And it's just an interesting dynamic when you actually look under the hood on some of this stuff. What do you guys think?
I agree. So the disconnect you're talking about is kind of what I've been touching on with like the earnings per share calls that we had last quarter, now that we're waiting to see what the market's going to say this quarter. The fact that a lot of people are still essentially discounting the Bitcoin business shows that it's going to take a little bit more time for the market to, I think the market understands what's going on, but it's a matter of acceptance. I think it's been validated, but I don't think it's been legitimized. And the difference between those two is legitimized means strategies in S&P 500 and Bitcoin based earnings are considered a valid metric that the entire market recognizes. And then once that happens, I think the floodgates open. I think we talked about this last week. But there is a wide disconnect in the fact that Apploven, of all companies, can have that high of a multiple, while MSTR is at 1.5 and people are calling it overvalued. That's a wide disconnect in the way that the market views valuation, the way the market views Bitcoin. And I think that's going to reconcile itself. But until then, that's when we make hay, and that's when we make money, and that's when we build our positions. And
I'll hop in there. I completely disagree, because I don't think MNAV over a commodity like Bitcoin is anything like a PDE over a potential growth equity, right? That's a future expectation of cash flows. Whereas with Bitcoin, BTC yields a future expectation of BTC per share. And then you could argue maybe the treasury operation should garner a much higher multiple, because BTC gain is a forward-looking U.S. denominated equity or U.S. denominated figure, USD denominated figure that could garner, a growth multiple on it. But if the company's willing to issue equity aggressively at certain prices above MNAV, they're essentially valuing their business for the market. So that's the part I don't understand. Like, you look at the way Berkshire Hathaway and Warren Buffett did equity issuances when they believed the book value plus the value of the entity was above the fair value of the entire package, they'd issue equity into the market. So I think prices at which equity is issued is a huge kind of important factor of this whole equation.
Yeah, it's like a supply and demand thing. You've got more supply coming into the market, which does impact like all of these metrics, right? You've got more just general stock that's trading in the market. So that should theoretically drop multiple. I think that math and the logic definitely makes sense. I think one of the interesting components to thinking about this, though, is like what's terminal velocity look like, and does the company get valued at less than its market cap or less than the value of the value that it holds? You know what I mean? Like, and that what about that rate of change of the value that it holds? And should capital raised on the preferred equity instruments, should that be thought of as revenue? And should the net gain on every single one of those equity instruments sold, should that be income? And what is the growth of that income?
I think that's a really interesting way to think about it. And I've thought about that too, Jeff. And I completely disagree. Like, I don't think that's the way you would value it, but I totally see how you could make an argument for it. So I'd be willing to get into that a little bit.
Yeah, it's just it's novel, right? Like, and I know people yell at me about this all the time. It's just totally novel. But the reality is you've got some of this architecture of the existing market that's playing into it as well, right? So you've got all of the passive index funds that are funneling all this capital in the door. So if you have this passive bid, why don't you capitalize on it and buy the asset that's going up at 50 CAGR in a gold rush? And
I think that's an underappreciated part of the whole story. And I think from day one, you've been right on that. So.
Yeah. I think this is reminding me of the poll Saylor did at the conference where he asked people who owns equity. Almost everyone raises their hand, right? Dano. And I think that's kind of a sign of the times. The status quo or culturally, we've been taught that you take your money and you put it into equities. Not only taught, but it's ingrained in the system, 401ks, your Roth IRA, etc. And I think this is just a symptom of broken money. When you have broken money, you monetize things, or you monetize assets which cannot be printed, equities, real estate, etc. And I think equities right now, at least to me, it's the easiest one to show how overvalued they are, because there are fundamentals, there are PE ratios. Something like real estate, it's a little bit more questionable, right? It's not as there's not necessarily, it's a little bit more subjective, I guess, is what I'm trying to say.
Yeah, totally. And I don't think any of that architecture is going to change anytime soon, right? Like all of this is innate. And this is something we've talked about a lot, is that, money, this concept of money and storing your money in equities is it's innate. It's what you do. You start a job, they're like, let's sign you up for a 401k. You're like, great. You don't even think about it. It's just automated. And like, these people are, zombies moving through the world. And there's a lot of society that's kind of structured and built like that. It's going to be hard for those people to change. Like, they won't change unless there's pain. And I think we're starting to see a little bit more pain in the market, just in general, thinking about all the jobs report revisions and things like that. You could see it kind of everywhere. So yeah, it's an interesting concept, but let's go ahead, Adrian.
So what are we saying the core issue is between that comparison then? Just that I'm sure. What is the core issue between how the market is valuing or should be valuing strategy versus how?
Yeah, I'll hop in. So I think when Bitcoin goes up in value, you can't place an equity multiple specifically on that gain in price. If you have a company and they don't accrete Bitcoin per share, it's a holding company, would you expect a multiple to be placed over the value of the Bitcoin?
Well, that you're describing like an ETF,
Yeah.
so no. But so all right, so totally flip the script, right? Operating company, that's collateral. That's power.
Right.
Right. Like that, like that's power to do anything. To do anything.
Future optionality, yeah. So it's
What
a
is
future
that?
expectation
Yeah,
of
so it's
the
like,
amount
what-
of
what-
collateral
what-
they will have in the future, right? Because an equity is a call option of
Right.
the future assets of a corporation. So yeah.
Yeah.
I mean, I would just say
So
the market may be discounting the future value of their Bitcoin holdings, and that's why I would say, like, I think MSTR price is low.
I don't know if the market's discounting the future value. I think that could be part of it, but I think the market's still largely discounting Bitcoin. I don't think that Bitcoin's hit the escape velocity that it needs to hit in terms of market perception for this kind of a strategy and this kind of a structure to be
Yeah, I
valued
think
appropriately.
I do want to say on that, but like, so let's say you believe Bitcoin will go up 30K into the future. The proper market response to that expectation would be Bitcoin price rising today. So I think a lot of times we think like, oh, that means if we believe Bitcoin's going to be going up 30K for 10 years, then strategy should have a higher multiple over the Bitcoin as a future expectation of the Bitcoin going up. But in my mind, if you believe Bitcoin will perform that way, then the Bitcoin price is too cheap now, because efficient market hypothesis says Bitcoin shouldn't outperform like S&P kind of idea.
How do you account for the passive flows that, you know, as they get bigger?
That's a good point. No,
they
I'm not saying no premium, like, by any means. I'm just saying I don't think you can use a traditional P to E on a non-cyclical business as an accurate comparison to the P to E on MSTR. I'm just saying MNAV is a good valuation metric.
I agree with you, but where I am struggling in just thinking through this myself is PEG ratios, price earnings to growth ratios. And if you think of just, you put like a base metric on strategies compound Bitcoin yield moving into the future. Like, what do you think the next decade CAGR on MSTR's Bitcoin yield
Let's
is?
just call it 10% for ease of argument.
Cool. I use 7.5. And in the year 2030, if they had 7.5 compound annual growth rate Bitcoin yield, they're going to yield 68,000 Bitcoin in 2030 at a Bitcoin price of $788,000.
No, it's incredible. Yeah, no.
That's 54 billion of yielded net income.
Yeah, no, that's insane.
Like that's not even factoring in the existing balance sheet.
Completely. But I think there's a difference in saying P to E's on traditional equities are too high versus P to E on MSTR is too low. And I'm in the camp, if you're a Bitcoin believer, that P to E's on traditional equities are too high.
They're probably both. They're both probably need to move.
So here's why I differ from everyone in the way I think of it. All multiples, in my view, just based on what I've learned from markets and what I've been able to glean from markets, all multiples are forward-looking, right? I think we can agree on that. And if multiples are forward-looking, that means that sentiment and expectations are driving those forward multiples, because there's no fundamental valuation, or there's no fundamental reason to value something above a ratio or a multiple of 1. Past its value, you're talking about forward-looking expectations. So I think what we need to talk about is the market appropriately valuing what strategy can do with their Bitcoin holdings in the future?
No. Yeah, I do not think so, because like what's the value of a company that has 11x more value than anybody else? Right? Like the next closest publicly traded company has 11 times less Bitcoin than MSTR has. Let's just say, for just like concept wise, Nvidia comes out and converts 100% of their net income from the next quarter into Bitcoin. They're still going to have 50% less Bitcoin than MSTR would. And the price
I think we're confounding two things here. The value of Bitcoin, I think we all agree on this call that Bitcoin is one of the best assets ever, right? I think we would all agree on that. But I think we are maybe making the wrong assumption that the market is going to appropriately value that. I think the market needs to accept Bitcoin, needs to accept Bitcoin acceptance and Bitcoin adoption and needs to hit a certain trajectory on that curve. And I think then everything starts to fall into place. Right now, what we're saying is we assume, we all agree that Bitcoin is the best asset. Therefore, strategy has the most of it. Therefore, strategy should have an appropriate valuation. I don't think that's the right framework. My view is it's about what they can do with it. Just having on the balance sheet doesn't really matter. I think the future multiples are going to come from what they do with it.
Yeah.
And how they're able
What
to
do you
monetize
propose
it.
other than preferred
I'd
stocks?
argue
Taylor has said
What was that?
specifically that the entire business model is predicated on the preferred stocks right now. So what do you propose?
Yeah. And that's what they're doing. Like they've just raised $6 billion and
Like I'm in the camp of like
6
wake
months.
me up when they're doing something else. But if the chairman of the board and the CEO said we're just doing preferred stocks, I think they're just doing preferred stocks.
Shall we get into the bad bond of the week? Because I think this might be a good time.
I mean, they're gonna have to change that, but yeah.
Okay, I want to talk about the bad bond of the week, and I'm going to try to do one of these every week. We'll see how it goes, and maybe I'll get a little sound bar, and it'll be like bad bond of the week, like boo boo boo, bad bond. Okay, let's look at this. This is the Hertz 12 and 5/8, 7/15/29. So this Hertz bond. So Hertz is the rental car agency company. They sold this 2029 bond last year in 2024. So it was a 5-year bond. They raised $1.25 billion. This is currently rated by Moody's at B and B+. Moody's is B, S&P's B, Fitch and Composite is B+. The current yield on this instrument is around 10%. Okay, 10% yield. The leverage ratio of the company is literally over 100%. So the total liabilities on their balance sheet is $23.5 billion. The total assets held on the balance sheet is $23 billion. The net income over the last 7 quarters has been negative. They've lost over $2 billion over the last 7 quarters. And the liquidity in the very middle here is this is the 2 bids on this instrument in the market. So basically there's just zero liquidity on this instrument. There are no trades happening on this instrument. So this is $1.25 billion of debt that's outstanding with a 5-year duration that's trading at a 10% yield. Okay. Let's look at Stride in the credit stack. Okay. You've got Stride, which is currently paying 12.25% yield. So it's paying 225 basis points higher than the Hertz 5-year bond. On a credit basis, you're 5x over collateralized. Like the price of Bitcoin is going to fall, what was that, 80% and stay below it before the notional goes to zero. You got a duration of 8 years. So I mean, it's a little bit longer, but Strategy's capital stack here, they've got ability to pay this dividend for like 100 years from just if the capital didn't move at all. And this BTC risk column, which I think is interesting, maybe we'll dive into this a little bit more later, but this is the cumulative probability based on a Bitcoin ARR assumption of 30% and a volatility assumption of 40%. This is the cumulative probability that at the end of the duration, 8.4 years, the value of the collateral held on balance sheet is less than the total summed notional value of preferred equity on balance sheet. So 0.56%. So incredibly low risk. It's paying 225 basis points above the Hertz bond. And it's just like so glaringly obvious that these instruments are significantly better than like some of the other stuff in the market. And the other thing I'll point out is Stride today had trading volume of $18 million. So it's somewhat liquid. And I think this can grow tremendously. The scale, the size and scale of this stuff is just enormous. You've got a $300 trillion market. Like this is one bond. I think that's the other thing. Oh, I don't have the other computer up, but you could go look at the high yield ETFs and go pull all of the list of all the securities in the high yield ETFs and all of the 144 bonds. I had to scroll like 20 of them before I found a company that I even recognized. Like there's stuff that's 10 to 12, 8 to 14% yield that you've never heard of, and the balance sheets are crap, the business model's crap, negative net income, and there's just a ton of risk associated with it. So it's pretty crazy when you really start to pull the string on some of this stuff. Like, I get why they're focused on the prefs. This opportunity is enormous, and that entire market is mispriced. It's like completely off. Okay, that's it. Bad bond of the week. What's next?
You were talking about Apploven. I don't want to go backwards too far, but while we were on the topic of
Yeah.
S&P, sent in the group chat earlier just about EA games going private. So I know.
Oh yeah, let's hit on
Yeah, I
that.
haven't looked into it, but as I understand, they're not dropped right away. It's when they rebalance. But when that happens, that would open up another spot. It's definitely more bullish because it's not just simply on the inclusion factors. There's an empty seat plus the normal rotation, and I mean they're in IT, so there's alignment, sector alignment within the overall 500. So I think it's bullish. So
Yeah.
it's interesting.
Yeah, so for those that are unaware, EA Sports was purchased by I think it's like a Saudi Arabia company, and they went private today. So that is one less company in the S&P 500 index. So I think technically there is a spot that is open for inclusion. And sometimes there are companies that get included in the S&P 500 in a one-off. And I think we saw that. I think was Apploven one of them? No, no, it was somebody else a couple of months ago. I forget who it was, but it was another kind of bigger name. So yeah, that's exciting. And I know both Dans, you guys are interested in miners right now too. Can we talk through that thesis? Like what's going on there on the mining front?
Yeah, I think we're looking at it more from like a macroeconomic kind of leverage upside perspective. So we're by no means experts in the miners, but we've been looking at kind of the American miners that are still mining Bitcoin as opposed to the fully transferred to the HPC side of the business and the data center build out. So we're looking at Mar and CleanSpark, and we hold small positions and call options on those two. I kind of like the exponential increase in Bitcoin profitability based on higher and higher Bitcoin prices, just because it's kind of that asymmetric upside if Bitcoin does go to crazy prices like we've been talking about. And then I also like the energy contracts, like thinking through the idea of like, okay, what are these energy contracts worth in 6 months time, 10 months time, when the demand for energy has just continued to increase based on the bottleneck and the data center build out and just energy shortage across the country. And people will be bidding up the corporations that have that cheap locked in contracts on the energy front. So that's kind of the way we're thinking of it.
Yeah, plus that coincides with just the push for more energy expansion in America, American Bitcoin bringing more and more hash rate onshore, and just being the absolute dominant leader in that. So I mean, there's even Mara's again, not like necessarily an endorsement, but they've had several campaigns that I think one was Block Space as a strategic resource that they were campaigning for, and Mara for America. So they're really trying to align with the Trump admin and the new energy bills. I mean, U.S. miners control blocks of Bitcoin. Blocks of Bitcoin are like the monetary equivalent to energy credits. So I think that fits both the narrative of the energy sector, AI expansion, and just this huge boom we're in there. So again, we're not holding them long-term spot. We're just kind of playing the cycle. Bitcoin miners are rallying right now. They have rallied, and we think they'll continue to lead and do so, just in the Bitcoin beta sector. So
yeah, and because there's a huge demand for energy just across the board, because all of these AI centers are popping up left and right. Elon Musk is building a new AI data center, and it just requires absolutely tremendous amount of energy. So the thought being that there's a huge demand and a limited amount of supply and infrastructure that can withhold it. I mean, that's the general theme, right?
Yeah, totally.
Exactly. Yeah.
So, I mean, Adrian, how do you feel about this? So you're following AI. I know you've got like 9 computers under your desk pulling through this. Like, how do you view this? How do you view this energy space, energy relative to AI? Is that on your radar? Like, how are you thinking through this?
Well, yeah. So that's why Ben, myself, and DR, rest in peace, were talking about miners last year, We thought that like Iron, Cypher, TeraWulf, a few others were really more diversified energy plays, and that their future would be with compute, and that they would have to. Our bet was that they would make a pivot over to being more HPC AI dedicated plays, specifically because of the energy and specifically because of the GPUs and how much compute they can house. And that's largely playing out. We've seen Cypher run, we've seen Iron really run. TeraWulf has had some good returns as well. I had positions in Iron and Cypher since last year. They've performed very well. It was a long hold, but Dan's had the thesis right. I think Ben, myself, DR had the thesis right. A few others had the thesis right. A lot of the miners, their ability to become profitable is going to be bore out from a pivot to HPC AI in full. Even CleanSpark now is talking about HPC and AI, when at one point they were a dedicated pure play miner that didn't want to dabble in HPC and AI whatsoever. So it's good to see that the mining pivot into energy has happened and it's playing out. I think that's only going to speed up if I had to take a wild guess. I know Ben and I talked about this a while ago, that we could even see hyperscalers coming in and buying out some of these miners specifically because they have the ability to house the compute. So the future is bright for that. I think the race for energy and the race to be able to house these massive data centers is going to be huge. Tier 3 data centers are a very, very niche product. It's not just a matter of building it out. You have to have everything systematically planned out. So it's not something you can just decide to build tomorrow. And a lot of these miners have the head start right now, especially Cypher and Iron. So I think that it's going to be very, very profitable. I honestly think that, ironically enough, Bitcoin mining is going to have a very large role to play in AI. And I don't think the AI play, quote unquote, is slowing down anytime soon. I do think that we're probably going to see some consolidation. I think we're going to see a lot of projects that are just pure hopium kind of blow up. But the need for the data centers, the need for the compute, and the need for housing the different models that are coming to scale is not going to abate anytime soon.
I'm going to ask the dumb question. HPC.
High performance computing.
It's as simple as that. Just computers. Yeah. Okay.
Yeah.
All right.
The ability
run around all over the place. Yeah.
Yeah. The ability to be able to have high performance data centers with the energy needs, requirements, and the compute needs at scale. That's high performance computing in a very, very simple nutshell.
Got it. So the one problem I've got with the whole mining side of things is really just the OpEx, like the capital expenditure, because you've got the mining equipment is continuing to improve and you've got to go replace that equipment over time. And generally at bad times in the market, you want to go replace that equipment. So it's a tricky, compared to like these treasury companies that are leveraging their balance sheet with teams of 5 people, and not the continuous overhead of having to, rotate all of your mining equipment and infrastructure and having to deal with that. So that's
that's why, and that was the thesis that Ben and I had last year. The miners know it is a capex intensive business, right? Everything you just called out is well known. That the fact of the matter is that the miners that weren't really going to be miners, the miners that were really pivoting to HPC and AI, they just can come right out and say it. That's what we were trying to identify. And I think that now with Mara and some of the other miners, they're being more open with it from the get-go, because the narrative, the trend is now HPC, the trend is now AI, the trend is now compute. So it makes sense to do so. But like in February to April of last year, miners that were talking about pivoting into HPC and AI were kind of being disparaged in the mining community because they weren't pure play miners for every reason you just called out.
Yeah, pure play Bitcoin miners.
Precisely. Yeah. They for everything you just called out. You buy the new equipment, by the next cycle it's already obsolete. You entirely are reliant on Bitcoin's price running. And when Bitcoin's price didn't run as much as people thought it would last year, and it's having more of a steady ascent, that spooked a lot of the miners. So everything from, and this is just my opinion, but like Iron, Cypher, Iron was always being more aggressive with their energy play. Cypher was being more coy, in my opinion. You have Bit Digital that got out of it almost entirely. You have Marathon that's being more diversified in HPC and AI. Now you have American Bitcoin. You have all these other Bitcoin companies coming into it for those very reasons. It is CapEx intensive. So I do think that the Bitcoin mining industry is not going anywhere, but I do think it's going to become more diversified, and it may even become far more decentralized with a lot more smaller players in the space. So the trend right now is compute, and the miners that are able to capitalize on that are seeing those returns, especially with Iron and Cypher.
Okay, so what's the risk of these companies that are not? Just trying to wrap my head around this. What's the risk of these companies that are not Bitcoin miners that are shifting towards this AI compute power play, like corralling the power? What's the downside risk?
So when you say not Bitcoin miners, are you talking about Bitcoin miners that are pivoting, or Bitcoin miners
Bitcoin, that were Bitcoin miners and now are like AI energy plays? What's the risk? Is it like energy innovation is the risk, where you've got some increased computing power that can be done with less energy? Or is it like global energy compute? Is it cross-border energy costs?
I don't think it's a matter of demand. I did a breakdown of this last year. The rise in the need for data centers was already increasing long before this AI trend happened. So the AI trend just kind of exploded the trend. So I don't think that we have any real risk of there being decreased demand for data centers and high capacity tier 3 data centers. Now, to your point about innovation, the only real energy innovation is going to be something like, broad scale nuclear adoption. That's going to create a bit of a
It takes time. Yeah, it takes so much time.
Exactly. That takes time.
And all those other things. Yeah.
Right. And then renewables, they're so I think what was it? Was it Fermi? I think Fermi, a company that just IPO'd today. They are a diversified energy play. They have nuclear, wind, solar. I think the ticker is FRMI. I think Rick Perry is actually behind that one. But I mention it because that's another energy play, right? And they're going specifically into AI and high power compute. So the energy innovation, I don't think that's a risk right now, because they still have to scale it. So even if we have some massive innovation tomorrow, it still needs to be scaled. So that's not a risk. The biggest risk could be they are not attractive to hyperscalers in sufficient at sufficient scale. A hyperscaler is going to want massive amounts of power for compute. If they are not attractive to one of these hyperscalers, then they have to go do kind of what Bit Digital is doing and get several deals. And if they can't justify the number of deals to use up the level of compute that they can have, they're now kind of stuck with Bitcoin needing to rip and them not having the sufficient demand on the HPC AI side because they can't garner the right deal. So the way you can offset that is by going cloud. So a lot of them are saying that we're not looking for one deal. We'll just be a cloud host of HPC and high power compute for everyone. And then that's a way that they can offset that risk. But that's the only real risk I can see, that they don't get the deals in time to justify the CapEx that they've put out to be able to scale the compute.
Okay, well, that's interesting.
And we can pull it way back up. I mean, we were talking Mara. We'll put it in more like strategy terms. But I mean, their Bitcoin stack, the 50K Bitcoin on the balance sheet, using simple math, every $10,000 move in Bitcoin adds 500 million in value, which is more than most of their peers' market caps. So we're just looking at the current cycle of miners leading with all of the energy buzz around them, and then Bitcoin's price lagging and sideways chopping, and then what happens when Bitcoin starts to rip here in Q4. And we're just looking for the asymmetric upside there. Again, not long-term plays, like it's not a core holding, but playing the options market on it into this rally, we think is, again, not financial advice, but is the edge there. Yeah, and also their cost of mining is substantially lower than their peers. I think they're around 33K per Bitcoin versus 40 to 50K Bitcoin for some of the others as well. Better gross margins.
So how would you weigh IBIT calls relative to minor calls?
You want to take that, Dan?
Yeah, I'll take that. IBIT calls.
Wait, hang on. And we got to say too, we saw Pigeons in the chat. Shout out to Pigeon.
Shout out Pigeon. Yeah,
his research is awesome. We've been following. We've been studying up on poker, Nash equilibrium, and all of that as well. The push fold strategy. So shout out. We did a research piece on Mara, and it's heavily influenced by Pigeon. So there you go. Keep it up, man.
But in terms of IBIT calls versus minor calls, I think the miners have the exponential like convexity at higher and higher Bitcoin prices because their profitability increases exponentially with higher and higher Bitcoin prices, right? So if you get Bitcoin at 250, I think you could get some of these miners at just heinous prices temporarily, not long term, but temporarily. And so
because they have the negative convexity on the way down.
So you get burned on the way down, but you get that upside. So really small, naked, long minor positions. And then the Bitcoin, the IBIT calls, we have all call spreads. So you're making like maximum payoff. For us, we have it set up at like 150K-ish Bitcoin, like really high returns right in that kind of middle band of price. And then higher and higher, those miners are where we'll capture the upside. So how we do it.
Yeah, locked in. You're structuring and designing a portfolio now. It gets a little bit more complicated than just longing one equity.
I think it's interesting because you can create, like, for anyone in the market, even if you just had a portfolio of Bitcoin and cash or MSTR and Bitcoin, right? The percentage allocations to any of those asset classes created a completely different risk return profile for you. Oh, and then 100%. Forget the pref stocks, right? You've got Stretch, you got Strike, you got Strike. How do you create
it's the efficient frontier.
So super interesting, in my opinion.
Yeah.
And then looking.
Well, yeah, and now
I was going to say, looking at some of the treasuries too, like the potential, as many have approached, one MNAV, some below, some, just over. We're looking at the potential for like the 3 to 5x MNAV multiple within that cycle. So we're all believers in a potential super cycle here. We think Bitcoin's going to rip. We're looking at Q4. We know how fast it moves in those 10 days, in that framing within the 50 days. We've seen it before. So yeah, when you apply that just to the landscape of treasuries and how complex their capital raise structure is and the rate of acquisition of Bitcoin and timing the market versus timing all the deals, and then the Bitcoin that's just on the company's balance sheets now for miners like Mara. And then, it's just all mapped out. So we feel you can get that 3 to 5x potentially quicker within this cycle of Q4 in some of the miners. And then we'd rotate back out and scoop up treasuries.
Over the treasury companies. You think miners over the treasury companies because
in the very short term
why
cycle here, just because of their existing Bitcoin, their consistent acquisition of Bitcoin. We've got all their metrics mapped out as well. So you can clearly see that where introduction, we could take Metaplanet, prefs, when are they happening? Lockup period, like unlocks, pipe deals, everything across the board. There's so many other variables that you can equate for that might miss time the rally in Bitcoin.
Timing.
Correct.
Timing might be weird.
Exactly.
But Jeff, that's not to say we don't like. I think long term, I'd take treasuries.
100%. Yeah, if we're talking spot, like a 10-year hold, the long bags, absolutely treasuries.
It's like the value. It is the value play, but it's also the growth play. It's like the growth and value play, where there's like you think about these other alternatives like mining and it's a different time risk. And Dan, to your point on thinking about the efficient frontier, you've got probably a 3-dimensional model here where it's like efficient frontier, but with a different time as your third dimension of how long you hold any of these instruments as well, because it's not a typical portfolio construction, Markowitz modern portfolio theory. You've got like a timing third element. So none of this is financial advice. Like anybody listening now that doesn't know what a call option is, I'm sure the last 20 minutes haven't made any sense.
Taylor says buy Bitcoin and forget timing the market. So it's that advice.
That's you know what? I think let's come back to that because that's there's risk associated with all of those different analyses. Not to say that they're not to say that they're wrong. I think all of that analysis is great analysis. Like it's not I'm going to YOLO 25% of my portfolio on my deep out of the money miner calls because I just think they're going to go up. Like you have data and information and theory that sits behind it. So there's a lot to that. But that being said, for 99.9% of people, it's probably really it's really hard to beat Bitcoin, and with the same amount of risk. Like I think that's the biggest challenge. Like if you just buy Bitcoin, like the risk you have, if it's with a custodian like IBIT or something, like you have very little risk. You're paying 25 bips annually for them to hold it for you, but there's very little risk associated with it. But like any of these other timing element plays where you've got options contracts or anything like that, like the risk profile increases not linearly, it's like exponentially, because your max loss is 100%. Whereas if you're just holding spot Bitcoin, one Bitcoin's one Bitcoin. So if you have a Bitcoin, you could just sit on your hands and wait, which I think is what all these treasury companies can do as well. Like depending on the time in the market, let's just say Bitcoin doubles from here. Every individual one of these Bitcoin treasury companies that has Bitcoin on their balance sheet has capacity to take on leverage. Their capacity to take on leverage is just doubled. And maybe with different risk profiles, but they can go take on 30% leverage with four people in their company, no OpEx, right? Like the capital expenditure is very little, and they're able to yield additional Bitcoin, additional value by just leveraging their existing stack. So yeah, it's just crazy times. I think everything's going to do really well. Like just taking a zoom out, I think everything is going to do really well. Like if you hold assets here, you're probably going to be okay. But it's just, conceptually, how do you think about all these other things in conjunction with each other? But,
Yeah.
and Dan, you brought up some really good points.
Let's parrot Grain on that, because he said that on quite a few live streams here, where he's like, congrats if you're here, if you're listening, if you're in this space, if you're in these equities, if you're holding Bitcoin, you've already won. So it's just a matter of time, and not being shooken out like all those guys who had their stop losses hit at $300, and Adrian scooped them all up here.
Yeah.
So the one word of caution with the miners right now that I'll give, though, is that a lot of them that have been moving recently have been moving because of the HPC AI narrative, not because of mining. So the move that people are expecting with Bitcoin for some of these miners may actually not come, and it may come after. And now some of the miners that are still more, quote unquote, traditional miners that are still in Bitcoin mining, I think they can probably see disproportionate returns, but it's all about capital rotation, who's moving from what. I definitely saw that the second when Nvidia started running again, when Palantir started running again, there was a distinct move into like iron and then Cypher, and the money just kind of flowed into it, and then it just started outperforming after being dead for like damn near a year. So I think that like Mara and other miners, they can do well also. It's just a matter of where's your position, and what your overall thesis is. I don't know if it's going to play out the same way that it has in last cycles. They're going to perform. It's just a matter of when.
Yeah, I think the challenge, and what I just pulled up on my screen, is this is the last 2 years. So this is going back to October 2023, and just plotting MSTR relative to Mara to look at performance. And like Mara is up 118% since this time horizon. I just picked this time horizon. I just went 2 years back. Which, if you're holding any other stock in a traditional framework, like if you're holding any other energy stocks, like Mara outperformed probably every single one of your energy stocks over that same horizon. But then you compare it to something like MSTR, where it's up 876%, and they're leveraging Bitcoin. And at the same time, ATM accretion dilution, they're, selling stock and buying more Bitcoin, which is making the whole thing worth more. So just an interesting perspective, right? Like this is the risk. The risk is you're holding something with a different risk profile than the underlying Bitcoin itself, and you miss face ripping rallies at different points of time.
Yeah, well, there's also value in having a position. So if you want to look up what iron has done year to date.
300% last week or so.
Iron's crushing it. Mike Alfred, is he listening to the
Oh,
stream?
yeah. Nah, he's probably sipping a
Yeah.
$1,000 bottle of wine somewhere, taking his mom out to dinner or whatever he's doing.
Or just drinking some aquapana. He's probably drinking that too.
Definitely steak.
Iron up 356%. Yep.
Yeah. Now, so the reason why I bring this up is I had to hold it all through last year, all into this year to see that move. So people that are thinking they're just going to get into it and get a run, to Jeff's point, there's a lot of risk in what you're going to have to experience. So if you have conviction to hold, more power to you. But once you get your move, it doesn't hurt to take something off the table, because this entire run has been the AI narrative. This has had nothing to do with Bitcoin.
Correct. And that's why we're levering up for the Bitcoin run now. And to clarify, we all know spot miners and don't plan to right now as well. It's just sniping the opportunity here as it aligns with the Bitcoin thesis. So again, not financial advice, but framing some of that move a little bit. But
you've got people in the chat saying long MSTR, short IRA.
Yeah,
that's gonna be a tough move. I think the other interesting point here is like what's IRN's market cap now? Like 5 billion, 6 billion?
I forget.
Pretty small, like on a relative basis. So yeah, getting a move like this, it doesn't take a ton of capital to get a huge move like that. And once these, oh, does it say right 13, here?
Yeah.
Oh, 13 billion. Oh my God. Yeah, I guess it's 47. 13 billion. Yeah, I mean that's a lot. It's moved really quickly. I mean, it's up just in the last month. It's probably it's gone from a $4 billion market cap to a $12 billion market cap. It's cooking. Totally cooking. Okay. We got Soleil backstage. Adrian, is it time to walk the dogs?
Off too.
Just about.
You're gonna jump off too? All right, go for it. Final thoughts, Adrian Mason, before you head out?
I hope everyone bought MSTR under $300, like I was screaming to them to do.
He backed up the dump truck.
But no, besides that, I think Q4 is going to be great. I think that we are, I think Bitcoin is going to do well. I think MSTR is going to do well. I think that the Bitcoin treasury is going to do well. I think the miners are going to do well. I think we are in the part of the market right now where we're going to see most of the returns for the year. Just give the words of caution I gave with the miners is that the moves that we've seen with some of them have been AI related, not Bitcoin related. So don't assume that there's a Bitcoin move coming right after the AI move with some of them. Not saying any names, just throwing it out there because I held some of these for a while and it's been painful. But besides that, I think everyone that's held, that's maintained their positions, that's gone through the ups and downs, we're about to see the returns. That's my guess for Q4. I think liquidity is lining up. I think seasonality is lining up. I think that we have everything lining up with regards to commodities, like everything that Dan mentioned. I think everything is lining up right now for a good Q4. So let's enjoy the ride.
Let's enjoy the ride. Mason, over to you. Final thoughts for you.
If you're a long-term believer in the Bitcoin treasury thesis, right now there's some amazing opportunities out there. I bought most of my MSTR when I was trading at a discount to its Bitcoin, and the operating business was valued as nothing, zero as well. So yeah, negative. So I think those opportunities are out there right now. If you do your research, if you're actually going through the filings and looking at the financials and looking at the management team, and they're out there. And I think some institutions later this year might wisen up to these if Bitcoin really starts to heat up and there's a general FOMO in the market. So, but yeah, I would say if you have a long-term thesis, now is the time to take a look at these companies because there's some deals out there.
Yeah, I think looking long term at a lot of these things, right? There's if you're long Bitcoin, you could take the same exact approach. Mm-hmm. Hold it for 4 years. Hold on for dear life, right? And dead guy portfolio always wins. You just long the equities, sit in spot, don't take on leverage, and go live your life, touch grass, get out there, and make the world a better place. I think there's a lot to that. Well, keep cooking, Mason. I know there's you got some competitors in the Brazilian space now, and you're out there talking to capital in New York, and going to high rises outside of Central Park and convincing people to buy equity and doing all that jazz. So, Mason, you are a really good example of what just putting yourself out there and talking in the space can really do, because you're now working for one of these companies. You're connecting to people. You're seeing for yourself. Can you give like a no names basis anecdote of the conversation you had this week?
What I'll say broadly, and this relates to digital asset treasuries, not Bitcoin treasuries. I will say that it is very true that there is a ton of capital allocators in the world who have to buy equity in very niche sectors. They can't just buy the S&P 500, and a lot of these capital allocators are very interested in companies in other regions or companies within the US buying any cryptos, because believe it or not, there's a lot of cryptos that have more attention, more volatility, are essentially more interesting than XYZ company in XYZ country. So that's really eye-opening. And what I would generally say is that these guys are kind of oblivious to what Bitcoin actually represents, what's happening here with Bitcoin on the fundamental, paradigm shift level of this is an invention equivalent to fire, electricity, etc. To them, no, it's just digitizing something volatile and or securitizing something volatile, and they don't care what it is. So that's what I sent into the chat. I was like, man, these guys do not know what's going on, and they very confidently do not know what's going on.
Very, very confidently.
Yes.
Yeah, it's it is crazy. You start to see when you're working in this space, and I could say this with certainty as well. Like everybody, like I'm working full time. I'm working overtime. I'm on the computer until 12 midnight, 1 o'clock in the morning, like doing stuff. And it makes sense that these people aren't grasping what's happening here, because they're just in la land working on something else, working on 10,000 other things, or they're equity investors focused on 200 different things, and they can't go deep on one thing. They can't find the best thing, so they're like, let's just shotgun a bunch of high volatility differentiated equity plays in the market, and one of them is going to hit and the other 9 of them are going to be duds, and we're still going to win. Whereas what everybody here on this screen is doing is incredibly focused on like this sector. Like this is the best sector. This is the space to be. We know everything about this space and what's going on. And then you go talk to these outside people and you expect them to know, like and it's like so glaringly obvious immediately that like how far ahead we are. And like 1 year in this space is like 7 years. And it feels uncomfortable. It feels really uncomfortable having to start from scratch.
And what I will say is there is so much capital out there that literally needs to find something to be invested in.
Bad bond of the week, $1.2 billion in Hertz, 12 and
again, this goes back to my earlier point. This is a symptom of money fundamentally being broken, where they need to cram it into something. You can't hold dollars.
Yeah. And right now, a lot of there's actually a lot of money holding dollars, treasuries, and a lot of money getting shoved into AI because they're like, that's the thing. The AI is the thing. How much did the people ask about AI when you talked to them about?
It was crypto and AI. I was the crypto. I was,
like, you're my crypto guy. You're young. You're wearing a suit. Okay, I like you. Right on. Okay, well, keep us updated. I want more New York updates
Yeah,
next time.
it's crazy. It's insane.
Cool. Okay. Thanks,
All right,
Adrian. Thanks,
peace,
Mason.
guys.
Yeah.
One quick tag on that, Jeff. Just talking about like the how uneducated.
Hold on. Is anybody else
Yeah.
hearing that? Is that
Yeah.
weird? Dan, restart. Unplug your mic and plug it back in. What's up, Soleil?
What's up? I can't replace either one of those guys, but let alone both of them.
Is it still going?
Yeah, it's bad.
It's fucked up.
Yes, that's bad. That's horrible. That is horrible. I don't know what is going on there. What up, Ben?
What's up, guys? Is this where we come for mining True North?
Mining True North. Yeah, both Dans are long, short-term calls mining, Bitcoin mining, energy mining.
We just like talking about like, you know, that kind of stuff. I think it's interesting to look at. But
Oh, it is.
Oh, Dad comes in. Oh, we just like talking about it.
It is interesting. I mean, I'm not going to rehash it. I was listening while you guys were talking about it for a while, so I won't rehash it. But have you guys been finding it fun running a hedge fund now? I mean, you have to look at the market entirely differently. And I think
Completely
that's one of the biggest things that people probably don't understand about the shift that you guys made is, yes, in the early days, while we all got to be incredibly, myopic and just focus on one security, and we just needed to be right about the one security. When you're running somebody else's capital, it's very different. And you guys have a charter for how you need to perform. Has it been entertaining to be able to branch out from just kind of the treasury plus Bitcoin space and have to look more broad in the ecosystem?
yeah, I think it's a good mental exercise, but I mean, we're just a lot more conservative with everything. And we're also looking at like, if we're going to take risk outside of Bitcoin, it's got to have like asymmetric payoffs. But I mean, I think it's just heightened what we've all been trying to do in our personal accounts, but we're using smaller position sizing with like, potentially higher expected payouts. Like I remember thinking early on, I think that's why we all got together in this group, right? We were like, oh, like if we're going to outperform Bitcoin, I believe it has a 30, 40, 50 CAGR, then the thing's got to rip and we got to do it intelligently and we have to not lose money. So I think MSTR at one point in time, it still continues to be like that kind of outperformance play. And there are other opportunities out there is what we've been kind of finding. But
I actually think it's really worthwhile, even just for other investors, when you go and explore all of these other sectors that are out there looking for opportunity, because the one thing it does is it grounds you in just how hard it is to beat Bitcoin. I mean, you're turning over every rock, you're going into every sector that people are hyping up and looking for opportunities there, but you quickly realize how hard it is to just simply beat spot Bitcoin.
yeah, exactly.
So I found the same thing. I've been all over the place in the markets, and I know we've talked about this, on our internal calls and stuff, but I've been all over the markets, looking for things that are exciting, because I'm one of those guys that believes if you're going to pay any attention to something, you've got to have some skin in the game. Right. That's what really makes you focus and pay attention to what you're looking at there. But what it taught me over time was that my allocation to Bitcoin wasn't high enough. And it just continued to creep higher and higher over the last several years, because I figured out just how hard it was going to be to beat that hurdle rate. It's very difficult. And you have to use, a lot of times, if you're out in other sectors, you have to be using leverage and things to outperform. So it's difficult and it's high risk. And you gotta really train that muscle to manage that and be ready to cut leverage at the right times, and can't get greedy with profits. It's a fun exercise because it completely refines how you invest over time.
Totally. It's definitely made
be harder
us
to
appreciate Bitcoin. Sorry, absolutely.
Yeah. And even if you do find someone that is beating Bitcoin, there's going to be other entrepreneurs that try to copy it or are just eager to disrupt it and do it, cheaper or faster, or just in some way disrupt it. So it's kind of like the people who are beating Bitcoin might not be beating Bitcoin in that way for very long. So it's
a time element.
Exactly.
Even when I look at gold, right? Like I know a lot of people have gold in their portfolio. I've got a little bit of gold in my portfolio, but I just look at the relative sizing. And I think about this a lot. I like to compare and like sort things. in terms of size and scale and like relativities. That's kind of how I see the world. I try to make it simple because I don't have the time to do like the Dan Hillary crazy exercise and like blocking out, time risk. And I look at gold as a $26 trillion asset, and you're like, okay, well, there's nothing ahead of it. It's the largest. It could keep going, but like how far does it keep going? And what's its terminal velocity? Does it have a terminal velocity? Is there a better opportunity? And I think like digital gold catching up to gold is a better opportunity. So if I have more than 10, 12-year time horizon risk, why would I not be 100% YOLO'd Bitcoin relative to gold, thinking about that horizon? And I know a lot of older people think the complete opposite. Why would I take Bitcoin risk when my, I'm 65 years old and I just want to keep my money and live the rest of my life? So there's a little bit of a dynamic shifting population dynamic and this time horizon.
Good news
all
is now
assets.
they've got products for both of those people.
That's right.
You have the Bitcoin, or you can have the product that's powered by the Bitcoin. You don't necessarily have to take on the volatility anymore. You can be senior in a capital structure and get average S&P 500 returns while you're over collateralized, many times over, with the ability to monitor that position in real time. I mean, that's what's so powerful about digital credit and these coming into the market, is it's going to make that possible on the back of the one certainty that we've all come to know, which is the constant devaluing of the dollar, which is going to drive the constant raising of the hard assets. And so, but now you've got products that will appeal to people that feel like they're still going much too far out the risk curve on something like Bitcoin, even though for all of us, we view that as the safety play, right? You're betting on the one certainty we all know is coming over the next decade, which is massive printing and devaluation of the dollar.
Yeah. So Ben, I know you speak with your father about this. I mean, how's he view it? You've talked to him about the Bitcoin backed bonds, the STRC, the preferred equities, and obviously older than you. He's got a different perspective. How do you communicate with him about these instruments?
To be honest, he got fascinated by them pretty quickly, but he's been in a regulated industry. So he was a financial advisor, still is a financial advisor. And he was at one of these firms that was blocking, Bitcoin investment. So they had access for the last couple of years to the Bitcoin equities, which was effectively MicroStrategy, but that was the only way to get exposure to Bitcoin. But when you start seeing these fixed income products come out, it solves a really massive need for a lot of his clients. And so, one of the things he told me early on was he realized that being a financial advisor, you're not in the wealth creation business, you're in the wealth preservation business. And you're not allowed to take risk effectively, right? So with all the compliance that you have laying over top of you, if you try to do anything further out the risk curve, or you start concentrating in single equities, you start getting calls pretty frequently. But at this point in time, a lot of the clientele that's using financial advisors is reaching the later stage of life now. And they're shifting to the need for stability, right? They've got fixed expenses. Not everyone's been able to accumulate, millions and millions of dollars, and they've got fixed obligations that they have to meet. And so you've got a lot of people looking at, what do I have coming in from Social Security? And then what do I need to live beyond that? So fixed income products that are effectively providing you the yield like you stayed in equities is massive. It takes time, certainly, to get people comfortable with the products. I mean, these products are less than a year old, right? So obviously there's going to be a curve here, but the conversations start now because there's options. Even if it's a part of diversifying out the fixed income component of your portfolio, but you're able to do it at a higher yield, when you can get comfortable with collateral positions, I mean, these are amazing products for people that are reaching retirement. So I think these over time are going to catch up, and where they might get a lot of market penetration is through that financial advisor route, because these are securities that they'll be able to offer They're fixed income, which is very comfortable from a compliance perspective. And once the analysts start covering them and providing insights into that over collateralization component to these, showing that this is not going far out the risk curve to achieve these high yields, these are products that are really going to enable people to meet all their financial goals in retirement. So, we look at these from our point in life where we've all, still got a lot of years to work left and, try to accumulate. We're still in the accumulation phase. We haven't shifted over to the preservation phase, although arguably you could say we've been in the preservation phase for a long time now because we flipped over to Bitcoin. But
Bitcoin
it's one of those things where, it's like Saylor says, people find Bitcoin when they need to. I think that same thing is going to be applicable for these prefs. I think you're going to have a lot of people that need to find these prefs in the next, call it 5 years. You have a huge population that's aging out of the workforce that's going to be going down to a fixed income. That creates a need to find these types of products. So I think just being able to screen down and find things providing this high of dividends is going to attract a lot of interest here as people are shifting their portfolios from growth to preservation.
So what it would take, just trying to put this in different words, what it would take is, because you've got monetary debasement, some fixed income need calculation that you had calculated. Let's just say you needed $5,000 a month, and now on a real terms basis, that's now $6,000 a month. You can't buy those same amount of bonds to cover your $5,000 a month. You've got to look for higher yield. You got to go further out on the risk curve, or change your 60-40 portfolio to 50-50, or do something weird.
The other thing that happens to a lot of people too is when you get into that last year or two, when you're coming into the end of your career, a market correction can scare the heck out of you because you see your base dwindle. So like right now, if we started getting a major market correction, I'm not seeing one coming, but you never know, right? They always show up when you're not looking for them. But if you got one and you've got this huge cohort of people that are leaving the workforce now, that is what causes people to panic into cash, right? They can't take the risk anymore because they've got a point where the math stops working for them. And usually the math that they're using is, you need to generate 4 to 4.5% out of your portfolio. And that's kind of what you're going to live on in retirement if you don't want to run out of money. Well, if you can plug in, 9-10% into that equation, even if it's blended with other assets that are paying you 4.5, that's a massive difference in where that bottom is. So it is one of those interesting things because you have to think through all these investments from the perspective of all these different generations, because while our generations are becoming, very aware of the issues with the money and how Bitcoin solves those problems, most of the people in that older generation are never even going to look at it, but they will look at equities that have high yields. And if that helps them stabilize, and it might even be able to allow them to keep a larger component of that in growth equities, or maybe they end up in strike and you get the blend of both, but you get the 8% or, whatever it is now on the actual cash yield, 13%, something like that. I mean, there's interesting products now that they can start to slot into that portfolio. And I think that's going to end up helping a lot of people. So the demand we've seen for these so far, I think, is minuscule relative to what's probably coming over the next 5 years, because that is the type of investor that's going to be rotating out of growth equities and more into fixed income products.
They're like the rotation magnet. Like if anything's overvalued and there's any fear, people are going to rotate into dollars. That's just going to happen. But a larger portion of people are going to be rotating into these types of Bitcoin-backed fixed income equities because of the yield and the security. Like both pieces, the yield and the security. Yeah, I mean,
it's a way to stabilize too. So for instance, with the higher yields now in these products relative to everything else that they're holding, I can look at my overall portfolio and go, all right, I know what I need to live within a range. If I take all of my fixed obligations here, right, my mortgages, my bills, all the fixed obligations that I'm going to have, I can carve off a smaller piece of that portfolio and move it earlier into these fixed products that are going to provide me the stability that my capital base is going to be there and the yield that I'm generating is sufficient to cover everything I need to day live my life, which can allow me to leave the other part still out there for growth. And so you may actually be able to improve your capital base here. So not to make this a financial advisor type discussion here, but I think it's interesting to look at all of these products from the perspective of different investors, because most of the investors we come into contact with want 3,000% a year returns, and they're willing to go way out the risk curve for it. But that is not most people. So if you're looking at where do these products fit in for most people and why are these products powerful, just go model out retirement for someone that's, achieved $1 million, right? Which sounds like a lot of money, but after all the money's been debased for so many years, it's not nearly as much as it used to be. And add in mortgages and healthcare costs and the rising price of groceries and all these things, it doesn't last you as long as you'd think if you are only gaining, say you're making 5 or 6% and drawing 4.5%, the purchasing power erodes out of that portfolio really, really quickly. So you have to start being a little more creative if you weren't fortunate enough to inherit money or make a bunch of money during your career where you could save. You've got to start looking for what other products provide me the opportunity without drastically ramping up my risk profile. And these do that in a really big way. Because like we've talked about, they're effectively AAA credit if they'd get rated. So
AAA.
But I think it's largely up to financial advisors to learn that. And they'll be slow to it, right? It's not going to happen fast. But I think there's 2, 3, 4 years here where as these continue to perform, they'll start to get highlighted more and more. And as digital credit becomes more prevalent and Bitcoin continues to perform, it'll become a very normal part of the conversation over time because it's a home run product if they can get comfortable with what it is and how it works.
And they will. We're in year one. Like this is year one of the next 100 years is Bitcoin backed digital credit on digital cryptography.
Yeah. It'll only take a few financial advisors to start the ball rolling, because once people that have financial advisors, they all talk to each other and they talk about the performance and are you happy with your financial advisor and money transfers from parents to kids. And then they're starting to have those conversations. And if you've got somebody that, took these types of steps and helped stabilize a portfolio for someone, that word gets out. And if they're outperforming and generating higher yields and that person has more income to live off of from someone else that had a relatively similar standing, it makes a massive difference. And that message gets around and capital starts to concentrate to those types of advisors. So it'll happen, but it'll just take some time.
Yeah, it's the how'd you buy a new BMW? Well, my financial advisor has these new Bitcoin backed digital yield products. Have you heard of them? And they're like, what?
They wouldn't even talk about it like that. They would just say, I got into a fixed income product that makes me 10% and is 8-to-1 over collateralized.
Yeah.
Right. Like that's the conversation in, normal land.
And there's a lot of normies out there.
Yeah. Almost everyone
There's a lot of zombie. There's a lot of zombie normies out there. It's funny. I got a message from one of my friends today, and I was like, okay, it's happening. I got a message. Can you explain like I'm 5 what you're doing with Bitcoin? I've watched a few clips on LinkedIn and I don't understand it. And it's funny enough, he got me to buy Bitcoin in like 2016. And so he's like familiar with what's happening here, but it's just, this is not on anybody's radar, like whatsoever. Especially if you're just not working in finance and you just living your life.
My mom was texting me questions about the Hurdle Rate podcast today. So, they're
it's like super cycles. I hear of this super cycle. Talk to me more.
I think this conversation is going to get a lot louder. And I think a lot of that's going to be driven by these products because these have the familiar structure that people can understand, right? Equities backed by Bitcoin is tough for people to understand, but collateral and dividends makes clear sense to people. They understand those terms. So these are products you can talk about in normal terms. And it ultimately leads to the discovery and research of Bitcoin because, well, for some, not for very many, actually. Most will just take the yield and go good enough and they'll put money there. That's how a lot of that works. But for some people, it'll spark that curiosity about the actual asset that's backing all this, and they'll want to go down that rabbit hole, and that'll bring a lot more people into that ecosystem. But I think where it'll become very powerful is you'll now have a product that serves the need of the generation that's, hitting retirement and aging out of the workforce now. But when that money transfers down to the kids who still have time, that money may find its way to actual Bitcoin at that point. So, there's a lot of interesting things on the horizon. Sorry, not to monopolize this discussion.
Oh, that's good. Can you hear me okay, Jeff?
Yeah.
I switched to
much
my
better.
webcam mic. I don't know what's up with the other one. But yeah, I was just saying, like, all these different equity instruments are very important towards the adoption of Bitcoin. I was at a wedding in Michigan, you're in neck of the woods, Ben, just this last weekend, and I was sitting at a table with a financial advisor, 5 mil and up. He said average 10, $12 million portfolios, 50, 60 clients that he personally managed. We were talking about Bitcoin, just all this stuff. And I asked if he owned any because he seemed to understand it pretty well. And he's like, what are we, 110 per Bitcoin? He's like, I don't think I could do that. Like, that's expensive. And I'm like he had no idea you could buy $100 of $1 of Bitcoin and it's divisible. But yet he had allocated IBIT to some portfolios. And that's why he was like, well, yeah, I mean, I can get the equity and then I can buy shares that are pegged to Bitcoin. So if I have $1,000 to invest, why wouldn't I do that versus put in spot Bitcoin? And he had no idea that you could just do that. So I was like, dude, we got to download an app right here at the wedding. Like, let's install it. But to that point, like, there's just so much education that still has to happen. And you can be a professional in this space and even have an allocation to IBIT and still not understand because you've never interacted with Bitcoin. You've never set up a wallet. You've never opened a Coinbase account or whatever else, Gemini, and you just have no idea how it works. But yeah, they wanted exposure to the asset class through IBIT, through an ETF, which they understood. And again, this is a guy who's been, he's about my age. He's been doing it for a while, good career. And again, like sizable portfolios in the space and quite a large book that he managed and had no idea. So that's interesting for whatever that's
Well, here's
worth.
how early we are. My mom won't buy Stretch because it's too risky. Like, it's fixed. It's pegged. It's supposed to be pegged. And interest, I don't know. It's scary. It's a stock ticker, so
it's an equity. It's a scary equity ticker. Did you talk to her about collateral?
Oh,
did you even like? It wasn't
was.
worth it. You're like, I can't. Just buy this thing. It's good. You get a better yield than your.
Let's
treasury
just play
account
Parcheesi and have a good night.
Yeah. I am going to shout out one of my friends. I bought this book, Blood of the Bourgeoisie, by Michael Sullivan, and I'm like 40 pages into it, but it's like turning Bitcoin education into like fiction. So if you know anybody that likes murder mysteries, it's this it's an advanced technological monetary ecosystem like woven through a fiction narrative, and my chiropractor is Bitcoin curious, and I'm going to bring this book to him. And he's like, oh yeah, I love fiction books. I'd happily read that. He's like, he wants to learn about Bitcoin. And, but he's like, I don't want to spend too much time. And I think this is going to be perfect. And I think it fits right in with, trying to teach people about Bitcoin easily through like a medium that's very adaptable. Shout out Michael Sullivan. That's a lot of work that went into creating a fiction book, and it like captivated me a lot really quickly. It's going to take me a while to get through it just because I got so many other things going on, but it was a fun and exciting read to get off the ground.
Where do you grab it? Amazon? On the website? Yeah.
Just Amazon.
Okay.
Yeah.
Awesome.
Amazon.
Guys, I'm going to jump here. It's been a great convo, as always.
Yeah.
I guess.
Later, Dan.
So did you guys already talk about where everybody's at with the treasury landscape right now?
No, not really.
I've got a question for you, Ben. I'll put you on the spot. But you guys, Sequins did a buyback, and as far as I understand, it's the first within the treasury space. I mean, MSTR had done one a while ago, but it wasn't Bitcoin acquisition related, right?
So they authorized a buyback.
Yeah, they authorized. Yeah.
Yeah. So actually, there is a company that's been doing buybacks already. So Empory Digital, I think they've got about 4,000 Bitcoin. They've been buying back for a couple of weeks now already, I believe. And, part of this is when you're running these companies, what you want to make sure you have is every tool at your disposal that you might need, because you don't know when you're going to need it. And a lot of people read it. So like when we launched the ATM, right, even though the stock was trading through all of the pipe selling at the time and people freaked out, right, because you see an ATM get launched, it's not always about deploying the tools immediately. A lot of times it's about making sure that every tool in the tool chest is at your disposal all the time, right? So you've got flexibility to be able to operate. And so for Sequins, they've got that issue right now where right now the stock is trading below the net asset value of the Bitcoin. And part of the answer can be you can just do nothing, right? You don't have to do anything. You're not forced into it. And for Sequins, they've got some benefit because they've already got leverage. So part of the capital raise, it wasn't just a pure pipe, it was a pipe plus a convert. And so, leverage on them it ranges, but 49 to 50% right now. So they're a very levered long play to Bitcoin. And when I look across this landscape and when you listen to a lot of the feedback that comes out of the investor community, there's a lot of interest in the defense of net asset value. That's a common conversation because it's been viewed that it takes away your entire ability to operate. And I think part of that is we've been a little conditioned for frequent activity. Like if you don't see activity every day or week, the market's decided there's no activity. Forgetting that if you go back and you follow the journey of strategy and the buildup, there were almost full quarters where nothing would happen, right? You'd just be in a waiting period. You put the leverage on, you want to be a levered long proxy to Bitcoin. When the leverage is in place, you can continue to wait until you've got the next move to make. But now, metrics have started getting tailored to reward short-term execution, which is good because it keeps the attention of management, but it can also be bad because it can incentivize you to do things that you might not want the companies to do over the long term. And that's one of the things that concerns me with these is people are they're going to remove actions that benefit the long-term strategy for frequent actions that benefit short-term trading activities. There's a reason sailors always said we're not going to make moves for traders. So if you're looking for me to optimize for your options expiration, I'm not going to do it. And I think that becomes important for companies that are going to endure over the long period. So when I look at a company like a Sequins or an Empory Digital or any of the companies that's trading below NAV, what I want them to do is I want them to put the structure in place to be able to self-correct if need be. So if it turns out that you've got a long period of time and you had no leverage, now you've got a real problem. So for a lot of companies, and I know I'm going sideways here, but if for a lot of companies, say all you did was raise equity capital, that was it, right? You've basically got an ATM or an ATM-like product. That's the extent of your treasury operations. In those scenarios, I'd be far more concerned when a company dips well below the net asset value, because that's your only tool at that point. If you have no other leverage on, you haven't had anything else authorized, all you have is the ability to raise equity. Well, the market's going to sniff out that, when you're below NAV, even if Bitcoin runs, if they don't see any upside, they can keep you below NAV forever. If you apply leverage to the balance sheet and Bitcoin runs, you now get the outsized impact of that appreciation in Bitcoin value, which is why having leverage is so important. There's a reason why strategy continues to highlight that they think they're under levered, right? Because they want that exposure to Bitcoin price over the long term. So for Sequins, they have that, right? They're plenty levered already, so there's no real rush there. But what you want is you want to be able to show your shareholder base, we're ready if we need to. You know, small cap
but
stocks, buybacks can be very impactful. So if you're a company that has cash, like Sequins does, and you have a buyback program and the market gives you a really deep discount, you have to define eventually what deep means, because I don't think at 0.99 you should be buying back stock. I think that would be a knee-jerk reaction. If the market gives you 0.6 or 0.5, you should probably definitely be buying back stock, right? So there's a wide range here, and this is all in untested waters at the moment, because this is the first time we've had this many companies out there in the market where capital has options to rotate through these companies, and you're seeing all different setups on the balance sheet. A lot of them right now are in the scaling phase, and the scaling phase is typically almost fully reliant on equity raises. And there's others that, you know, have leverage on the balance sheet. They've already achieved some level of scale. They're in position for a Bitcoin run. You know, Bitcoin goes to 150 by the end of the month, which I heard someone say earlier. You know, just following normal cycle dynamics. The ones with leverage are in a better position to outperform. The other thing I look at as an investor in the space is I think currently people got too scared, right? So you see all these anomalies happen across this industry, and I think it scares a lot of people out of investing in the market at what's probably, not financial advice, the best risk reward time to make investments that we've seen in a very long time. When premiums get compressed out of a lot of these equities, you know, that's the time, because all the froth has been out of Bitcoin, even though we didn't really drop that much in Bitcoin, right? We went down to like 110. That was fine. But now that the froth and the excitement came out of the market, you see those premiums compress. And when you have companies that are below NAV, if you look at those companies, and I wanted to go make a position for just exposure, right? That was all I was looking for. I was going to go make an allocation to IBIT. Right now I've got options. I can look at these other companies and go, if one of these companies has a structure that gives me a realistic chance of just achieving one multiple to NAV, 1 times NAV. If that's all I think it's going to achieve, if Bitcoin heats up, I could take what I was allocating to Bitcoin beta exposure, buy in to some of these companies at a 0.8, 0.85 multiple to net asset value. And if Bitcoin goes on a run and the excitement in that market just brings that valuation back to just the value of the assets they actually hold already, I'll have greatly outperformed Bitcoin during that period of time. So you look at these, you have to look at these as opportunities, because these are the scary times to allocate. Most people, like I said earlier, where what market correction causes people to go to cash, and then they won't re-enter the market until the excitement's back and everyone thinks that it's going to go up forever again. That same thing's playing out here in these treasury companies, but it's going to happen on a more frequent basis, right? Because it's high voltage investing in equities.
Yeah, I will also say that leverage also increases vol, because there's more uncertainty about operating business. There's more people that hate it. There's more people that are shorting your stock and yelling about it. Like, this doesn't make any sense. It's like there's this like crank up the dial of what the valuation should be when you do have leverage on your balance sheet because of those different things.
And there's a big, you know, the community, and there's a tribal aspect to what's going on right now too, right? It's like we've got the NFL out there and everyone's picking their team, and, you know, everyone's rooting for their team, and their team's great and your team must suck because their team's great. You know, we've got a little of that going on out there. And we all saw it happen, you know, when MetaPlanet went on its major run, and we were getting people in the comments yelling at us that, you know, we were damaged.
Why don't you cover MetaPlanet?
Shareholders by not telling them to go from MicroStrategy to MetaPlanet. I like MetaPlanet. My own MetaPlanet. Bought more over
Looks
the last
really
couple
good
of weeks, because now it's at just such a good, you know, value risk reward value proposition here. You know, but you have to detach yourself from the emotional response, right? Everyone gets excited when they're winning. We do too, all the time. But there was a lot that dove into MetaPlanet the same way a lot dove into MicroStrategy last November, when everything was spiking and going vertical. And you know, instinctually, these things aren't going up forever. And so you've got to control those emotions during these cycles, and, you know, just play the math and start looking at the comparisons across the industry. And if one thing's starting to greatly outperform everything else, you got to ask yourself, you know, is this real? or is there a rotation that's going to happen here? Because for a while these were all very low float stocks, capital could rotate from name to name to name and just keep pumping name after name after name. And you started to see a lot of these names with the exact same pattern. You go look at any of these charts right now, they look almost identical. So this is one of those really painful, they say investing's got expensive tuition. That's true. It really does. And this was one of those mini cycles. It feels like a full cycle, but one of these mini cycles where people now have to reevaluate and look and go, has the thesis broken for me or not? And if the thesis hasn't broken, then you've got a great opportunity that probably doesn't stick around for that long if Bitcoin starts ripping here, because excitement starts coming back. People start looking for those opportunities for the high voltage plays, and the names will start to move again. But these are the times you position and then you sit on your hands and you wait. This is how most of us did it with strategy, right? We bought when everyone was writing obituaries and telling Saylor that he gambled everything and lost, and we were all looking at it going, I don't think that's the case. So he bought in and we sat for years, right? Which is why we're able to absorb all these drawdowns. It wasn't a quick win. We didn't all just make money on a month-long option contract. Like, this was years of sitting on an equity, right? It was the dead man's portfolio approach. And I think that for the names that you see that start to separate themselves in this space, there's going to be opportunities to do that, but you've got to time it right. There's a reality of investing where there are bad entries. The strategy can be good, the value proposition can be good, and you can get a bad entry. That's the emotional part of investing and controlling your emotions when you're buying in, because the entry matters a lot.
Yeah, 100%. Ben, I'm sorry, I gotta break your focus here. Somebody posted strategy STRC is on Robinhood. I just checked. It looks like it is available.
Confirmed
on
here as well. I've got it pulled
today,
up. Yep.
Which is huge, and it hit an all-time high in after hours, so it's trading at 98.31.
The Robinhood pump.
The Robinhood pump. How many people are in Robinhood?
You might get that ATM turned on soon.
Oh my God. Like anybody that's like just holding S&P 500 or like that wants some this is just that's a huge, I feel like this is huge. The amount of capital that could go and potentially buy STRC now has gone up drastically. Where are the young people investing these days? It's on Robinhood and Webull and these digital platforms that we've kind of grown up with. So I am super excited about that.
Robinhood just got a new cash account for their investors.
Did Metaplanet
get
added too?
No, that would be that's gonna be crazy when that happens. Because you ask who's on Robinhood. Well, they're not really buying preferred equities. We're Wall Street bet gens for the most part.
Actually, you know what? I'm curious to get your guys' take on this. I mean, some of these like Kraken and Galaxy have tokenized platforms now, so they're doing like tokenized equities on a Solana or Ethereum blockchain. What's your thought or take on having a Bitcoin treasury company on a tokenized Solana or Ethereum chain?
Wait, a Bitcoin treasury company or a crypto treasury?
A Bitcoin treasury company like MSTR on a tokenized Solana chain. Like, is that okay?
I don't get it. It sounds shitcoinery to me.
Either way,
it sounds shitcoinery, but it's like it's another pool of capital. Like people, it's like imagine Dave Portnoy is on his Kraken account and he's like going in and out of the shitcoin of the week, and like when he enters or exits trades, like he goes in and out of MSTR. Maybe MSTR is his like base. But it's tokenized and sits on the Kraken platform, and the shares are held by Kraken, and it's just another pool of capital that can access. Like, it's another pool of capital that can access your stock. So in theory, it should be really good because it's more demand that can potentially buy your stock.
Yeah, who cares what the rates are that bring them? It still all flows up to Bitcoin, and that's
right. You're right, but you're also supporting another crypto ecosystem. That came up this week, and I was just like, damn, this really plays with my ethos here. But I feel like you can't not do it.
Yeah, I don't know. That gives me the heebie-jeebies because I won't even own a cold storage device that supports anything but Bitcoin. It has to be Bitcoin only. Like, you know what I mean? And I refuse to trade on Coinbase anymore because they're not Bitcoin only. So I buy on, any of the Bitcoin only exchanges.
You only buy guns that shoot Bitcoin bullets.
Exactly.
I get it. I get it. You're just full on Bitcoiner. Okay, but what about the Gen Z that's growing up and they're like, all right, well, I want to hold all of these different
Have fun staying poor.
I play with it.
Oh my goodness, that financial advisor I was talking about, he had some wallet on his phone because his friends started something and sent him like 1,000 sats of whatever, like tokens. So he even had that. He had no idea what it was or where to get it. But that was just a funny anecdote too, that he had some fraction of some shit coin that his friend was involved with on his phone. He didn't know. He could go buy $1,000 of Bitcoin. Yeah, it's wild.
God. Crazy. Okay, well, that's big news.
It looks like
Jeff,
Strike are showing up now too. They're not supported yet, like you can't trade them yet, but they're at least on the platform, and they weren't before.
Are they?
Who?
Strife and Strike.
Nice.
Okay, there's STR.
Oh yeah, it literally wasn't a couple minutes ago.
Yep.
Sweet. Stuff's happening.
Wow. Oh my
October.
gosh, that's so big.
October, let's go.
Didn't see it.
Fixed income's about to rip.
Oh my God. Fixed income is about to go so hard. Oh my gosh.
Fixed income God
that's
candles.
Super exciting.
Time to go further in the risk curve. Yeah.
This is what Saylor was talking about at the unconference. He's like, okay, who here holds equity? And it's just like, it's so easy. It's so easy to put money in Robinhood and like gamble. And the platform is just like so sexy. Like the interface is amazing. And it's just so easy to put money in there. And even like automatic drip in there. And now you have a savings, like you have a savings account with an equity ticker in front of it. It's like, oh my God, this is like, it's so big. This is so big.
Didn't they have like their, what is it, gold or whatever that was paying you like 5% on your cash balances or something?
Yeah,
right. Gone, eviscerated.
10 and a quarter, like double that.
What? Yeah, why would you hold any cash? And like same with River had some sort of platform that it's like, okay, if you hold cash here, you get X% or something. But it's like now, like, why would I even do that? It just made that product obviously. It just makes all these little savings accounts just completely obsolete.
Yeah, take your 10 and a quarter and your cash, and then go buy Bitcoin with that interest.
The other thing, it's so easy to take money off of there too. It's like just as easy as
you already went corporate
as holding
on this podcast, right? You got your dollar, and now now it's Hood. Come on.
Yeah,
you're not going to help
I know.
Face here.
But
True North got sold to Coinbase for $2.
Yeah.
To be fair, super easy to buy Bitcoin on Robinhood too. You just click on crypto,
buy
click
Bitcoin,
go.
And you could send it out of there. You could send it out of there too.
Correct. Which was not
Which is
available
great.
a year ago or whenever it was. But
take your 10 and a quarter
I was,
dividends, buy Bitcoin, send it to your wallet.
There you go.
I was one of the first 10,000 people to sign up for Robinhood in 2014 because I was super pissed off when I was making trades on E-Trade in college and I had to pay $10 a trade for it. And I was just poor. And I'm like, this is so stupid. Like, why do I have to do this? And then it was like, oh, Robinhood, we're going to let you trade for free. I was like, this is great. So I signed up for it. I was on the wait list for like 2 years before it came out. And it like 2016, it came out. I'm like, all right, this is cool. But yeah, anyway, I'm long Robinhood from the interface perspective, and they're doing a lot of integration.
And everyone got mad at them, but like their options setup is really good on there. It's really good.
Oh, just the interface, like just so you can
where
go
I do
see
most
everything.
of it, but
like
when I was stealing Soleil's brain and turning it into a computer overlord and trading, I was using their APIs because it was really easy to automate it.
Yeah, and their simulators really good too.
Mm-hmm.
Yeah.
Yeah, let's get people started here. You take
Detain fixed equity play. To move your
That's a Dan Hillary special right there.
That's a Dan Hillary special. Do not tell Dan.
He's
He's
gonna
going
be
to be obsessed with that. Yeah, just the arbitrage.
Ugh.
Holy cow, man. Okay, well we're about 2 hours. That's all great news. Uptober started strong. We've got CAMT has been removed. Bitcoin's up $5,000 in a day, and now Stretch. We're getting jacked about fixed income being on Robinhood. So it's a great day to be alive. All right, final thoughts. We'll pass it around. Maybe over to you, Soleil.
Yeah, when Ben was talking about some people switching over to MetaPlanet, and I just thought it was kind of funny that not only did they switch, but the ATM bears swapped over to MetaPlanet too. And as soon as their price dropped, it was the same damn complaints that people started making when, MSTR, I got to switch over to a faster horse. And it was just like recycling all the same old, FUD bear arguments.
Let it
I
breathe.
talked to a few of the guys doing
let
the
it-
podcasts over there, and I go, "You guys have never understood us better than you do right now." While everyone's mad at you. These are the cycles you go through. This is why it's people underestimate what it takes to like hold shows like this together while you're just getting berated because there's this desire for that they want your conviction to come to the level where they lost theirs, and they just want you to agree with where they're at that day. And I think it's frustrating to people when you just hold your conviction going, look, this is a really long-term play for us. Like, I don't really have anything to do. I've been allocated for a while, I'll adjust once in a while, but this is sit on my hands time. I'm not going to do anything drastic going into the historically most bullish quarter for Bitcoin. If we get an elongated cycle, like this is sit and wait time. It's going to fluctuate. Now, it's painful if you chase, and there is a lot of value. There's been expensive lessons because you have to learn about all these new financing transactions. That's been, I think, really eye-opening for people and I know that, there's a lot of hatred that's come for all the pipe deals and things because you started to see kind of the dynamics there of what can happen. And I mean, you never know what's going to happen because you don't know what any individual investor is going to do with their shares. But once you have some data to work with, you can start drawing conclusions and find good entries on the back of all these events, right? There's such a category called event-driven investing. Well, this is one of them. And you realize how important it is to get into the details and understand the pricing of any financing. That's kind of what just happened with MetaPlanet as well, right? They did a massive financing and you saw the price kind of magnet to that pricing of that financing. And, you've seen that a few times. So these are the learnings that are going to set people up to be able to find really, really good entries because you've completely de-risked positions. And if you believe in how those teams can execute and how they can operate, you position yourself for the long term and you sit on your hands and throw your mouse away for a few years so you can't click any buttons.
Yeah. You see the sailor image on your cell button.
Yeah. Sorry, Soleil, I totally took over your final thoughts. So
no, that was the final. Next.
The final. Yeah. Over to you, Dan.
Yeah, just macro is looking great. As we were talking, the dollar's in decline, debt surging, gold's ripping. Where gold goes, Bitcoin usually follows, and a lot harder and faster. So Uptober, just and to echo Ben too. I mean, make sure you find your own conviction, allocate. Dan was talking about just portfolio sizing and percent allocation. Make sure you're aware of that and have your eggs in whatever basket you're comfortable with. And then, allocate, go touch grass. It's Uptober. We're going higher.
And be willing to do the research on your own. There's not always going to be someone to do it. And people want transparency. And there's been a narrative out there that there hasn't been a lot of transparency in all these private financing. But the reality of that is that literally the legal document that everybody signed that has every single term is out there on the SEC websites. You can comb through them, take your time, do your research, understand the terms, and then allocate when the timing's right. So That's how you create
Yeah.
edge. Being willing to do the research is what creates the edge. So if you're hunting for edge and you want to find ways to outperform other people, you've got to be willing to go to the next step that most people won't go to, and that is diving into the details. So don't skip that step. Plus, you learn an absolute ton when you do that. It's well worth it to go and spend the time doing that.
So don't just copy trade
Hard to
people with
read,
tons
but-
of followers. It's not how this works.
You shouldn't copy trade anybody. There's a reason, right? I've said it for a long time. People get really mad that I don't share what I'm holding on to, but it's for that exact reason, because I know people will try to copy trade, and your risk tolerance won't be the same as mine. Your financial standing may not be the same as mine. You know, like for those reasons, I made the choice really early on just to stay out of that business, right? It's fun enough to just cover all the things happening in these markets and talk about it, because it is a sector that I'm an investor in and I'm very bullish on for the long term. But there's no shortcuts to finding the right positions for your portfolio. You are the portfolio manager of your portfolio, and you need to treat it that way. And because of that, that comes with doing your own research and not copy trading. You can go look for ideas. I love watching the trades you make every week. It's fun because it tells me where to look, but I don't use it to pick what I'm going to buy. But it can fast track where I start researching. So if I follow you into something, I followed people into trades before, and I've gotten smoked, and that was on me. I mean, nobody made me click any buttons. So, but it taught me a valuable lesson, which was I had missed something. There was something that would have been blatantly obvious if I'd gone to the next step and done that research. And ever since then, I won't buy anything that I haven't gone to that level, because if I'm buying something, I want to sit there and be able to hold it for a very long time. That's my style of investing. It's pretty boring. Yeah, I'll do options once in a while because I like to feel something too. But for the most part, I just want to allocate and then go outside. It's nice this time of year. I'll reposition in the winter when it sucks outside. So, do you want maybe
100%.
final thoughts, Jeff?
100%. Yeah, is that your final thought? I mean, you're it's like final thought from Soleil, and then like Ben's kind of wrapped around final thought, and then Ben's, and
We got a
those are my
Ben Saylor workman monologue here.
people like to go to sleep. So if people are listening, we've probably got at least half of them to sleep by now. So.
Yeah, Jeff, we didn't break 120. We're 118.8
We
right
did.
now. What do you guys think?
Yeah.
120 by week's end. Any thoughts?
Absolutely.
120 by market
Absolutely.
open.
Send it.
No.
Send it.
Send it. Yeah, a lot to be excited about here. Ben, go ahead. Final thoughts.
That was it, man.
Rip it.
You got all my thoughts in that, and we're
Okay.
good. Let's let these poor people go to bed.
All right, I've got some final thoughts, and it's kind of on what you were saying, Ben. Here, the opportunity for me when I look at this landscape. Well, one, everybody here is learning every single day, and we don't know the answers to everything, but we're trying to figure it out. And this is everything we're talking about is novel, and almost every single one of these episodes hurts my brain because I'm just trying to like figure it out in real time, comprehend, and then like communicate it. It's pretty difficult. But one thing that I keep coming back to, and what makes this space so exciting, and one of the reasons we're here, is because this movement is so enormously large. It's deafening. This is like a mega trend of Bitcoin disrupting money on top of a mega trend. You've got digital Bitcoin backed credit, another mega trend disrupting the largest capital pool, a $300 trillion market, like the largest capital pool on the planet. So you've got a mega trend on top of a mega trend disrupting the biggest pools of capital the world's ever seen. And that's huge. And it's painfully large, and its gravitational pull is so heavy I like can't focus on anything else. So that's why I'm here. That's why I left the reinsurance world to come work in this space, is because this is the biggest opportunity probably of our lifetimes, reframing the monetary base layer and the credit base layer. And I am just super excited to be here, and I hope to be here for decades into the future, just making making hay. That should be good. Let's all make a ton of money and make our lives better and make the world better. And
works for me.
That's it.
Right
That's all I
on.
got. Cool. All right, guys. Thanks for the time. We'll catch you probably next week.
Going
Cheers,
out.
guys. See ya.